Hello, I'm Krista Das. Welcome to Smart Investing Market Insights on TaipanFinancialNews.com. Investing in metals such as copper, lead, and nickel has swept in some enormous gains in recent years. Practically everything traded on the London Metals Exchange has skyrocketed in value. Here with me today is Andrew Mickey, founder of Small-Cap Commodity Prospector, who will discuss the metals market and uncover some opportunities for us. Andrew, thank you for joining us.
It's good to be here, Krista.
So tell us what's happening in the metals market.
To be honest, most of the major metals have had their runs and the upside is very limited, but there are still loads of opportunities in minor metals. In fact, the Financial Times has already started touting the opportunity in minor metals.
By minor metals, what do you mean?
Well, Krista, minor metals are those metals that don't trade on a major exchange like the London Metals Exchange. For instance, cobalt, uranium, germanium, and iridium are all minor metals. And minor metals are where the next leg in the great commodities bull market is going to be. We've already seen ruthenium hit $9,000 per pound and rhodium soar to $99,000 and $600 per pound. Meanwhile, major metals like copper and zinc will never hit more than $5 a pound. That's why minor metals that are key elements in chemical and petroleum processing and have dozens of other essential uses are the place to have your money now. In addition to that, most of these minor metals are 100% irreplaceable. Each metal has a specific purpose and unique properties, which means there is no substitute for them. That makes them highly insensitive to price. So when we look at rhodium at almost $100,000 a pound, we know this metal that's used in jet engines, LCD production, and hardening other precious metals. It is far more costly for manufacturers to not have this metal at all than to shell out $100,000 a pound for it.
So narrowing the focus even further, let's get straight to the point. Is there a specific minor metal that you expect to see significant gains in the near future?
Well, Krista, one of the minor metals that I've watched soar over the past 2 months is cadmium. In just 60 days, we've seen cadmium prices literally go parabolic. The price of the metal has soared 150%.
Wow.
And when prices are rising that fast, we know there's big opportunity.
And what is cadmium?
Well, Krista, that's what everyone's been asking me lately. Cadmium is a very useful metal that is primarily used in batteries. It is most commonly found in the ground with zinc, and in total, about 75% of all cadmium produced is used in NiCad or nickel-cadmium batteries.
Where is this demand coming from?
Well, since 75% of the world's cadmium is used in batteries, it's surging demand for batteries that are driving prices. The current generation of hybrid vehicles uses loads of cadmium, and climbing worldwide sales of autos is helping to push the price of cadmium higher. And thanks to the soaring demand, its price is climbing, and a handful of companies are going to be delivering hefty profits thanks to the ongoing spike in cadmium prices.
So is there a particular company that you recommend?
Well, I'm sorry, but my absolute #1 play on rising cadmium prices is reserved for small-cap commodity prospectors. My top pick is the stock of a smelter company that profits directly from rising cadmium prices. You see, a smelter separates the ore into zinc and cadmium, and that's where the big opportunity is with cadmium. However, there are still a few good opportunities in the zinc-cadmium market. There aren't too many zinc-cadmium pure plays out there. Most zinc mines usually produce a good bit of silver too. However, a small pure play zinc producer like Pacifico Resources, ticker symbol PAX on the TSX Venture Exchange, offers solid short-term upside potential.
So how long should our viewers hold a stock like this?
Well, I have to warn you, zinc isn't a long-term investment. This is a play you want to be out of by the end of the year because 2007 is looking to be the last good year for zinc. According to the International Lead and Zinc Study Group, global refined zinc consumption during 2007 is forecast to exceed supply by only 35,000 metric tons. That might sound like quite a big supply-demand gap, but it's actually very small. Last year, 11 million metric tons of zinc were consumed worldwide. As a result, a 35,000 metric ton supply shortage is just a drop in the bucket. On top of that, the future isn't looking too bright for zinc either. While there's an expected shortfall of supply coming this year, 2008 and beyond is a completely different story. Even though zinc demand is expected to continue to rise between 3% and 4% per year over the next few years, there will be plenty of supply to go around. The world will have a net zinc surplus in 2008 and prices will fall. This is a quick 6-month in and out trade.
Fantastic information, Andrew. I don't know how you uncover this stuff, but it sounds like a great opportunity. Where can viewers find out more?
Well, they can go to taipanfinancialnews.com or directly to my website at small-cap-commodity.com to learn more.
Thanks, Andrew.
Oh, you're welcome, Krista.
Well, that's all for today's program. We'll be sure to keep an eye on the metals market and the opportunities that Andrew suggested. For TaipanFinancialNews.com, I'm Krista Das. Until next time, have a great week.